This is FinTech Insider News. This week, Klarna lets go of £26 billion in US loans. Monzo expands into mobile plans, and Robinhood launches their new AI investing tool. We'll be discussing all of this and more on today's news show, so don't go anywhere.
At Thales, we know cybersecurity can be tough and you can't protect everything, but with Thales, you can secure what matters most. With Thales industry-leading platforms, you can protect critical applications, data, and identities, anywhere and at scale with the highest ROI. That's why the most trusted brands and largest banks, retailers, and healthcare companies in the world rely on Thales to protect what matters most. Applications, data, and identities. That's Thales, Thales. Learn more at thalesgroup.com/cyber.
Make your next vacation unforgettable. On Royal Caribbean's newest ship, Star of the Seas. It's everything you've loved about every family vacation you've ever been on, with mind-blowing thrills at the largest water park at sea, 7 onboard pools for every level of chill, more than 40 ways to dine and drink, and even more to enjoy at our award-winning private island, Perfect Day at Kock. This is the new Star of the Seas. Click or tap the banner to find out more.
Hello and welcome to episode 991 of FinTech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks, and fintechs to build the next generation of financial services. I'm David Barton Grimley, Director of Strategy and Head of Product at 11FS. And this week, I've been preparing for Money 2020 Middle East in Riyadh, coming up in September. So for those of you listeners who are going to be there, please drop me a message on LinkedIn. I'd love to have a chat. So onto the news. There's a plethora of news unfolding around the world this week, some fast-moving, others taking a more measured pace. And one slower but no less remarkable story comes from Sweden's far north, and this seems to be breaking the internet at the moment, where crowds have gathered in Kiruna, which is in the far north of the country, to witness the relocation of a 113-year-old church, moved in its entirety from one part of the city to the other. It's actually quite a cool video. As that landmark begins its deliberate journey across the city, we're taking you on a faster-paced tour of this week's bigger fintech stories. And joining me to unpack it all are our brilliant panelists. So let's go and meet them. First, we have a very welcome FinTech Insider debut for Anine de Kock, Head of Partnerships at Peach Payments. Welcome to the show, Anine. We'll be hearing more about Peach's exciting news later. But in the meantime, could you please tell us a little bit more about yourself and your role at Peach?
Of course, thank you. Thanks for having us. So, I head up partnerships for Peach Payments. And Peach Payments, for those that are not familiar with it, is one of the largest payment gateways within Africa. And we like to call ourselves the ones that like to go first to market. You don't always find a fintech that wants to be first with things, but I think we pride ourselves in being brave enough to bolster up on the most relevant and new things happening within the market. So yes, we're very excited to be here. Thanks for having us.
Awesome. Welcome to the show. And next up, we have a FinTech Insider debut for Jason Saltzman, Head of Insights at CB Insights. Welcome to the show, Jason. Could you introduce yourself to our listeners?
Yeah, how's it going, everyone? I'm Jason. I'm Head of Insights at CB Insights. We're a predictive intelligence company covering 10 million plus companies with a big focus on private companies, which I think many of the companies we'll cover today fall into that category. And we're really focused on understanding the companies and technologies building the future and how they all relate to each other.
Amazing. Yeah, it's great to have you on board. I mean, I definitely follow a lot of the work that you guys do, and it's great stuff. So it's great to have you on the pod. And next up, we have Chantal Swainston, founder of The Herd. Welcome to the show, Chantal. Tell us a little bit more about yourself and The Herd for people who may not be familiar with it.
Of course, and thanks so much for having me. So I'm Chantal. I'm a fintech PR consultant. I've been working in the space for almost 10 years, which terrifies me every time I say it. And I launched The Herd about 3 years ago. So that is a platform to get more women in fintech and financial services into public speaking. We work with a plethora of different events, so Money 2020, Fintech Fringe, Innovate Finance. Also work closely with journalists at Bloomberg, the FT, Forbes, just to try and get better gender diversity into fintech media. So if you are looking to do more public speaking or you know somebody who should, put them in touch with me.
Awesome. Great. Welcome to the show. We have our panel and let's get on to the news. And this first one is from Finextra. Klarna to sell $26 billion of US BNPL loans. Klarna has entered into a multi-year forward flow agreement with US student loan provider Nelnet, under which Nelnet will buy up to $26 billion worth of newly originated pay in four, so that's buy now, pay later receivables on a rolling basis. This transaction provides Klarna with predictable off-balance sheet funding, boosting its balance sheet flexibility as it eyes further expansion in the United States and gears up for much anticipated IPO. Despite selling the loans, Klarna will continue to originate and service all the receivables, so they ensure continuity in user experience and merchant relationships. The move follows a similar strategy in the UK, where Klarna previously offloaded around £30 billion worth of its BNPL loan book to hedge fund Elliott Advisors, freeing up capital for growth. So, Jason, I'd like to come to you first. This is quite a complex story. I mean, it'd be great to understand what this is. We know that Monzo has done something similar to this in the UK, but how is this deal different? What is this?
So I think starting with Klarna's £30 billion loan sale to Elliott late last year, right, that was a backwards-looking transaction. And this new deal with Nelnet ends up being a forward flow agreement, right, which, the two of those sort of end up being, very different structures in terms of what Klarna is able to avail themselves of, right? The new forward flow agreement for future originations, sort of becomes this multi-year commitment for creating predictable funding versus a little bit of a fire sale back in late last year, where Elliott, the hedge fund, ended up being, sort of Klarna transferred both assets and servicing rights, and sort of removed their ongoing operational burden there. Right, it was immediate capital relief, but it didn't offer an ongoing revenue stream. It was really just a balance sheet cleanup exercise. Whereas this new forward flow agreement with Nelnet sort of creates a new ongoing opportunity for Klarna to maintain their servicing rights, maintain the origination of the loans, and then I guess Klarna gets a sustainable funding model to originate, sell, service, repeat, and Nelnet gets to hold on to the loans and deal with all the back end.
So essentially, I guess it allows them to expand their balance sheet, right? It means that they can lend more to more people. Is that right? Is that kind of how this works for our listeners?
Yeah, more or less, overly simplified.
Sort
but yes.
of. Yeah, in an oversimplified way. So I'd like to expand it a little bit and just sort of talk about like what this means for their IPO. I mean, like, I mentioned it when I was reading out the news. It's kind of an IPO is somewhere on the cards. I want to open it up to the panel, maybe Chantal and Anine. Like, do we think it's on the cards? Like, what's happening there?
I just feel like it's still a really volatile market in America at the moment, and I feel like the timing of it. Some reports are saying as early as September, so we're talking a matter of weeks. Makes me quite nervous, having worked on a listing before, to be doing it in such a kind of a market that is going through so much at the moment. And but on the other hand, so one of the other things I was looking at as well was when you search for the news, everything is saying that the losses have worsened, and it's kind of this position that Klarna's in a really difficult place. But actually, if you take a look, so the losses only came to 0.56% of sales. I say only. It's really hard to know what that's like relatively for other BNPL firms because they don't make that information as available. But people spent $30 billion through Klarna last year, which is 19% more than they did the year before. So as a company, they are in a really strong position. And just because they're holding on to more money in order to be able to kind of provision for these loans doesn't necessarily mean they're not going to get that money back. So I think as a company, they are at a strong place. Whether or not the market is ready for an IPO and whether or not they think now is the right time, that's where I think it's a more interesting conversation. But then how long do you wait, right? They've been talking about this IPO for years. So maybe now is the right time. It makes me nervous, but all power to them.
Yeah, that's very soon if it goes ahead in September.
I couldn't agree more. I think it's, if I may, the volatility and the concerns around potential over-indebtedness of the public or the general consumer is always of concern. It's not something that's new to it, right? But most definitely, I think that should be one of the things also to consider in the bigger scheme from an investment perspective. It's always something if you're in the credit industry or related industries, you want to keep a close eye on the over-indebtedness of your consumer or the general market. And it'll be very, very interesting to see how all of this rolls out, right?
And Jason, maybe coming back to you, yeah. What do you think about the wider market?
Yeah, I was going to say one piece, just working on what Anine had said there, right? The over-indebtedness, shifting the receivables off to Nelnet sort of positions Klarna, at least in their BNPL business, more as focusing on the fee income, which generally attracts a higher multiple than lending income.
Mm-hmm.
And so thinking about this in terms of what that affords them to position an IPO accordingly, more as a tech-enabled SaaS platform than a lending company, is maybe a fairly strategic move there. That said, I don't know how much you're going to get a shift in terms of how the market views them in maybe the span of weeks, maybe the span of a few months, right? I think you're probably going to want to see, or investors are going to want to see, sort of continued stable fee income, especially as you think about what comes after, as part of this forward flow agreement.
And is that part, do we see that happening in the BNPL industry more broadly? I mean, I know there's this pivoting that Klarna are doing to become more like the one-stop shop for shopping and become more like a bank, and it's not just all about lending. There's this kind of diversification. Is that something that we see more widely, maybe, Jason, in the market?
Yeah, I mean, I think we're seeing everyone trying to diversify into a one-stop shop. We'll talk about this in another domain for Monzo's move into mobile later in the show. But right, I think you're seeing, especially with the BNPL shops, that when you get traditional banks offering BNPL services and when you get other BNPL providers offering banking services, it's sort of this race for everyone to become all in one.
Yeah, absolutely. I mean, the SIM thing is very interesting, which we'll talk about in a sec. And Chantal, what do you think about the wider BNPL industry in the UK and in the US? Is it still growing? Is it still hot? Is it sort of fizzling off a little bit? So what's the vibe check on that?
Yeah, I mean, Klarna actually used to be a client of mine back in my agency days. So we got to work on kind of bringing BNPL to the UK back when it was deeply unpopular, which was actually a really, really fun project.
I remember those days.
Yeah. The thing that I think Klarna's done a really good job of is what a lot of people would consider maybe a feature, they've managed to turn into a really successful business. A lot of companies have now, including the likes of Monzo and, the names that we all drop, have been able to introduce these BNPL features, products quite quickly. But what Klarna's done is they've built an entire business around it, and it's very consumer facing, it's very consumer friendly, which gives them probably the best leg up to be that super app that they're trying to be. We've talked about Monzo launching their mobile network, but so is Klarna. They're also trying to diversify what they're doing. I think the other thing that we need to bear in mind with BNPL as well is that the legislation is still sort of trickling through, and legislation makes it harder for the new players, not the existing ones. So I think with that and the fact that we've already got a handful of the really big players, you've got your Afterpay, your Affirm, Klarna, I think it's maybe saturated. I don't think we're going to get many more new BNPL startups coming in. But that doesn't mean that it's not still a very hot product. And I think the way that they've packaged it up and brought it to customers is really impressive at the end of the day. I think everyone's like Klarna's marketing, you kind of have to be in awe. They've spent a lot of money on it and it's worked. But yeah, I think they've done a particularly good job of it, I think.
Yeah, there's only so much lending that people can stomach, right? Like there's only so much. Anine, I'd like to come to you for your perspective on the African market. Like I know Africa is a gigantic continent, but you guys operate across quite a lot of countries there. How is BNPL growing there? Is it still massive growth or is it saturated?
No, most definitely. And what we're seeing from an e-commerce perspective, firstly, is BNPL, the adoption has been significant. Especially in South Africa, we've seen that its card is very much still king However, BNPL products, the various ones we've got in South Africa, and we're blessed with a few, they most definitely complement your traditional card sales, right? So the adoption of it and the growth within buy now, pay later and alternative credit products has been noteworthy. And if you don't offer that as a payment method, you as a merchant or a business could typically fall short of a significant percentage of potential sales that you're losing out on. And the more we see that our customers in the market are adopting payment methods, so you'll see them register for one BNPL, try it out, try their hand at it, and then soon realize that it's, they adopt one or more, even 3 to 4 BNPL products, and they finance it with the credit available. And you typically see larger purchases, which is fantastic to see, bigger basket totals, as well as return spend on that, which obviously is promising for us and always encouraging to see that it's moving definitely in the right direction.
Amazing. So it's becoming like a first payment method, really, across a lot of countries in Africa. It's fascinating. So it's one to see how things grow. We're going to move on to the next one, which I think we're going to have lots of thoughts and ideas on. And this one is from Finextra. Monzo to offer customers mobile plans. Monzo is developing its own mobile service, offering digital SIM cards and monthly contracts as a mobile virtual network operator. That's a mouthful, MVNO, in the UK. The project is still in its early stages with no launch date or specific pricing revealed yet. Monzo confirmed customer frustration with existing mobile contracts as the driving force behind the initiative. The move aligns with broader trends among fintech firms like Revolut, N26, and Klarna, who are also exploring mobile telecom services to diversify revenue across non-banking sectors. Monzo was ranked number 1 overall among UK personal account providers in the latest customer satisfaction survey by the Competition Markets Authority, taking the lead in both Great Britain and Northern Ireland. So it also topped the rankings for business account providers. So it's doing pretty well. Monzo also recently topped the 11FS Pulse rankings in their feature benchmarking list with an almost perfect 98 out of 100 feature score. And to tell us more about this, we had a voice note from Joe Colchester, head of Pulse product here at 11FS.
Huge congratulations to Monzo for topping that chart yet again. No huge surprises, really. I mean, they really excel when it comes to customer satisfaction. And that's something that we've seen consistently on Pulse, not just from the journeys that we review, but also from all of the customer feedback that we see on the platform. And it's also no surprise again that they topped our very recently published feature benchmarking charts, both in terms of the feature score and the user experience score. They're right at the top there. So impressive both on the types of features they're delivering and the value add that they have, but also how they're delivering it, which is fantastic. When it comes to the mobile offering, if they can compete in the same way that they have been, prioritizing user experience and value, then I'm sure they'll do very well. Of course, it is a very competitive landscape, so we're very eager to see how that looks.
So, as I said, in the readout, so many different providers are doing this. And Chantal, I'd love to come to you first. What is your perspective? I mean, so if you are in the UK at the moment, as I am, you will be seeing so many ads for this, for all sorts of different companies are launching eSIM services all over the shop. Why is this now such a hypothesis for, oh my God, we have to launch this service? It's going to help us attract so many more customers and make more revenue. What do you think, Chantal?
It's interesting that it's having a resurgence, because I feel like it's not a new product at all, right? If we go back to even when the supermarkets first started launching their mobile networks, I think I used to be a Tesco mobile customer, and they had their MVNO with O2, I think. So it's something that a lot of big companies have kind of gone, oh, we'll bolt this on and we'll introduce this. And it's low cost. I think it's low risk, and it helps customers stick around. It gives you an extra touch point with your brand. I think back in the day, Monzo struggled a little bit with getting people to get their salaries paid into the bank. So having that stickiness and not having people use it as a secondary account is something they're probably a bit mindful of. But it is having a huge resurgence. It's not just the banks. I think Millwall Football Club has also introduced their own. So it's something for everyone.
Oh my God.
I mean, God knows what the kind of promotion is there. But actually, the FT, as I was researching this today, the Lex column published a really, really good piece, if you've got a chance to read it, on why these companies are doing this. And one of the things that they looked at, so I am ripping this off straight from the FT, we've got to give credit where it's due. They were saying that these MVNOs earn about £10 per user per month, and they pay £3 in wholesale charges. So if Revolut got 15% of its 11 million UK customers to join a phone plan, they would get nearly 140 million a year in extra revenue. So
wow.
It's about 5% of its 2024 total. So it's not, it's a nice to have. It's probably not going to change the format of the business, but it's good to have. So shout out to Nick McGaw for that fantastic research. It's not mine. I can't claim it, but I can see why they're looking at it. It's a nice thing to do. It's not that complicated from what I can see, and you can make some more money. Why wouldn't you?
Yeah, that's a huge profit margin. That's amazing. Jason, what do you think about this?
It's interesting. This is a fairly unique topic, right? Because it's not something that's prevalent in the US. So from my perspective, right, MVNO is sort of this, and sort of the linkage to whether it's a grocery store or your bank is something fairly unknown or fairly unique to my mind as a US consumer. Right, I think the eSIM question and the ease of, right, in theory, looking at Monzo's strategy here, right, the idea is that this, makes Monzo as a super app stickier, or Monzo's individual products stickier because of an ecosystem. I don't know that with an eSIM and the ease of switching between providers, that it's actually that much stickier. I think it actually gives them maybe more of a leg up on data, on personalization, and on sort of future product combinations that would be more interesting, right? If you see a place where they can go to start either bundling, MVNO and the banking products, or launching new products that combine the two uniquely, right? If there's a better way to do digital payments when you have someone as an MVNO customer, right? I'm sort of pontificating here, but I do see some white space for them to run into, if they're trying to be truly differentiated as a super app.
Yeah, I mean, it's interesting because the original thesis for what you're saying, like, hey, let's take a telecom and let's mash it up with payments, which I guess is the sort of the other way around, comes from East Africa, right? It comes from Kenya, it comes from M-Pesa and everything that's come out of that. And it's still very, very prevalent, I think, across Africa, if not growing. Anine, I mean, I'd love to come to you on this for your perspective. Like, it must be kind of interesting almost for you to see banks in the UK do this the opposite way somehow. Are eSIMs a thing in South Africa?
eSIMs, most definitely has come to the forefront, but not as prevalent as the rest of the world, most definitely. I think it's an interesting time how that rapid evolution is coming slowly but surely, also coming through the ranks. I've just today received a new credit card, and I got a SIM card with it, right? Just a package, but there's a SIM in here. It's actually an eSIM that you register through the bank. So most definitely becoming more popular in South Africa, but I'm not hearing or seeing it in our other geographies to be as prevalent as in the rest of the world.
Yeah, for sure. I guess there's also another question. I mean, me personally, one of the reasons why I looked at this article with a degree of skepticism is, as much as I understand the margin point, I mean, it sounds almost straightforward. Of course we would do this, as you say, Chantal, like, we're going to make a ton of money out of it. Let's just go and do it. It's solving a problem. At the same time, would I want my bank to be my telco? I'm not 100% sure. I would want my bank to also be the same company that monitors my phone calls or understands my phone data or anything like that. There's something about it that seems a little kind of weird to me in some ways. But I suppose if we flip the conversation back onto Monzo, because I think the bigger story here is maybe where Monzo is going and how they're doing. There is this story about the proliferation of features across things like Revolut and Monzo that we see in the UK. And I guess maybe, Chantal, I'm going to come to you on this one. Like, maybe they're like fighting, like, how can we just launch as many features as possible and go as wide and horizontal as possible to become these kind of super apps? It's like the super app fight, I guess, in a way. Is it, Chantal, do you think?
It does feel a little bit like that. And I'm just not confident that the UK culture lends itself to having everything in one place. Like, I think to your point, I don't want my bank account, my phone provider, maybe I do want my mortgage, but I don't want one company to have all that oversight in one place. I quite like the compartmentalization. It's a bit safer, I think, because the other question then is, what if you get your account closed, or what if something happens with your bank and then you suddenly can't access your phone? Like, is it safer to keep these things separate? I don't know. To be honest, I'm just lazy. I probably wouldn't change it to go into my bank, but there's also an element of kind of trying to keep your relationship separate there. But I think in terms of the super app, the way to do it isn't to just introduce the same thing as everyone else, is it? I would say that if they were trying to do that, they should try and come up with something that's competitively different, rather than, because it feels like all these neobanks have come out with this announcement in the last 4 to 5 months. So if maybe it is a head-to-head competition thing, we don't want to be the neobank without a phone provider. But yeah, I just think if you're really going in for super app, got to do something a bit different, I think.
Yeah, definitely. Jason, any final views from your perspective in the States? Like, how is bundling happening there? If these kind of eSIM things are just not really a thing in the US, like what are challenger banks really trying to bundle in there with their services?
I think you start to get to more people. Right. So it's interesting. You almost take the social apps and start bundling in payment features. Right? We're going to use X as the crazy example for this, where he wants to be the everything app. Right. You start to think about the places where you have critical mass of users, critical mass of people, and realizing that as people launch, or as you launch more features, you have sort of built-in distribution and adoption. Right. I think that same element holds when you look at the fintech super apps, right? They have built-in adoption. It's just a question of whether or not I trust my bank or my banking provider to be the same way, whether I trust a social network or not, to be that super app for me, right? You look at the difference between US or European super apps. I think they face different challenges than Asian ones do. When you look at WeChat being the ultimate example of a super app, right? We have different consumer habits. We have different data privacy laws. We have different established vertical competitors, right? Like, there's nothing that clears a straight path for anyone to become a super app the same way it does when you look at it in some of the Asian offerings. And it's this very alluring thing for companies to go and try to tackle. Of course, I want more mind share, wallet share, daily active use cases or active users. I just don't know that Western consumers are prone to accepting that.
Yeah, I think, and what's interesting is because it's all kind of happening now, I think we'll see pretty soon. I think we'll see within the next year or two whether these things stick. Whether we are going to be using X, formerly known as Twitter, as a bank. In any way, or whether we're going to be paying our buddies on that in any kind of scale. I think it's all kind of happening. Okay. On that note, we're just going to take a quick pause here and back shortly.
Wouldn't it be great to manage your portfolio on one platform? Well, now you can trade all in one place on Robinhood. That means you can trade individual stocks and ETFs and also buy and sell crypto using seriously powerful and intuitive tools at one of the lowest costs on average without needing to manage multiple apps. Robinhood makes withdrawing and depositing crypto seamless. Send crypto to your Robinhood account or send crypto from your Robinhood account to other wallets without deposit or withdrawal fees from Robinhood. Trade all in one place. Get started now on Robinhood. Trading crypto involves significant risk. Crypto trading is offered through an account with Robinhood Crypto LLC. Robinhood Crypto is licensed to engage in virtual currency business activity by the New York State Department of Financial Services. Crypto held through Robinhood Crypto is not FDIC insured or SIPC protected. Network fees may apply to crypto transfers. Crypto transfers may not be available to all customers. Investing involves risk, including loss of principal. Securities trading is offered through an account with Robinhood Financial LLC, member SIPC, a registered broker-dealer.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider. We're back, and so is After Dark. Before we dive back into the news, we've got something big to share. We're stepping out of the studio and hitting the stage once again with a special live edition of our industry-leading FinTech Insider News podcast. Join us at London's Village Underground on Wednesday, the 24th of September, where we'll also be celebrating a major milestone. It's our 1,000th podcast episode. So if you heard me read this out at the beginning of the podcast, we're like 990 something, which is just such a crazy thing. So it'll be a big celebration. Tickets are available now. Head to 11fs.com/afterdark to secure yours. We'll also put a link in the description below. All right, now back to the news. And this one is from Finextra. Robinhood UK rolls out AI investing assistant to decode market movements. Robinhood UK has launched Digests by Robinhood Cortex, an AI-powered assistant that explains stock price movements in plain English. The tool analyzes news, analyst reports, technical indicators, and internal trading data to generate real-time, digestible insights. It is now available for free to all UK users following positive feedback in the US, when 95% of users found it helpful and easy to understand. The feature appears on individual stock pages and is designed to educate users, not offer financial advice. The rollout is part of Robinhood's strategy to democratize investing by making market insights more accessible to everyday investors. So I think we had Robinhood on a previous news item a few months ago talking about this launch in the US. I mean, Jason, I want to come to you first. Like, how is the market receiving the kind of AI stuff that Robinhood have been doing? I know it's like they're going big into it, right?
Absolutely. I mean, I think it's one of those things where, right, the stat speaks for itself, right? 95% of people find it helpful, right? It has a very positive reception, right? I think the same has been true for most AI tooling around sort of democratizing investing knowledge, right? You know, this is a complex topic that has seemed off limits to most people in most walks of life. Robinhood as a platform and some of the other platforms, as they democratize the ability to invest, also needs to democratize the education around it. And I think that's where you get to the satisfaction rate. The question then becomes, is 95% satisfaction, 95%, sort of usefulness in terms of generating returns? Or is it sort of this facade of this, I find this helpful, I find it educating because I didn't have it previously, and it's not actually really helping me make better financial decisions or investing decisions, right? I think I'd love to see the data from Robinhood on that. I don't know that any of us have actually gotten to see that yet.
Yeah, 100%. It's probably very early days. Chantal, what do you think about this? I mean, in the UK, it's very crowded, right? The, robo-advising investment app marketplace. I don't know really what to call it. Like, it's called it wealth tech, right? It's very, very crowded, and everybody's talking about AI. Are you seeing this as becoming like a big new battleground to differentiate?
I think we just need to get more comfortable with the fact that AI is bleeding into pretty much every element of financial services, and it's only going to be natural that this is another place that it does. I definitely wanted to try and have a look at this, and you're like, I'd like to visualize it, but I couldn't find anyone that was using it at the moment. But to me, it's almost like a content product. It's supposed to be advisory rather than it's not going to go and make any kind of strategic investments for you. I do like the kind of sound of it. I guess my big question is what is the analyst research that they're using? Because 90% of the proper analyst research is gated, right? And it's paid for. So what public information are they able to access that is genuinely going to be helpful in this case? That I'd love to know. I guess the other thing as well is I'm a very boring investor. I just sort of chuck everything in a index fund to hope for the best, try not to look at it for a couple of years. Like that's good enough for me. Whereas this feels like this will be really helpful if you're into like stock picking. So I think if that's the way that you like to invest, then super useful. But then I don't know, I'm very risk averse. I'm like, is that the best way to invest? It's up to people to make that choice for themselves, really. But yeah, I'd love to know what information they're using. But yeah, again, I'd love to see it. I mean, ultimately, I think we're going to see even more of these. So you can either kind of roll your eyes and say another job for AI that it shouldn't be doing, or get on board and see if it works.
Yeah. We're seeing so many fintechs launch these out. I mean, very recently we had Starling talking about their new AI banking tool, which is also operating at that kind of, guidance. We're just going to give you better insight into your money, and use kind of transactional data not to tell you what to do, but to kind of guide you. And it sort of sounds that's where AI sort of is. Now, Anine, I want to come to you because transactional data, in some senses, payments data, is just such an important source of truth for what you could use to layer some AI-based stuff on top of it. I mean, are you guys at Peach thinking about something like this, or are you using generative AI in any kind of interesting way?
Very actively looking at deploying AI on various fronts for our business. Firstly, obviously, combating fraud. In addition to the traditional fraud combating mechanisms, we have deployed some very interesting metrics and applications generated by artificial intelligence for that purpose. However, with PCI, the protection of your card information and the actual end user, a lot of the data we're seeing is fairly anonymous. You can work with an IP address and deploy AI to prevent on an IP address, or match an IP address to a geography to a merchant, right? So this is an unlikely scenario. Add, additional authentication. However, with the protection of card information, it's fairly almost, I want to say, impossible on our instance even to actually access that and to get the end user to identify it's a John, Sarah, or Harry transacting, and they are the fraudster. So yes, by design, that is, but massive successes we've seen in deploying AI, and it feels so new still. I mean, it's a very, very exciting space where you can literally build or do, it feels like almost anything. As soon as you gain insights as to a new trend, because as soon as you design for combating fraud and insights or intel in terms of modus operandi, you already, I want to say, times, behind already. So I think that most definitely helps us in combating, identifying, and preventing fraud as a first step.
Yeah, it's interesting because it comes back to what is the source of the data, and how can we trust it? Was a point, Chantal, that you were making about what is actually underpinning all of this, which I think is just so fascinating. I mean, Jason, if you look at the kind of the US market more widely, I mean, are you seeing any examples of agentic? Is that happening yet, where a thing is being launched by a fintech to do something rather than just summarize information or like give me some insights?
The short answer is yes. The longer answer is yes, with mixed results. I mean, I went to AI4 in Vegas last week, and if I heard the word agentic 20,000 times, that'd be an understatement. You're right. I think the other word I heard on top of it, that it immediately followed agentic across use cases, right? Whether it was finance, fintech, enterprise workflows, whatever it might be, was outcomes, right? No one really can show that they're getting consistent outcomes that are truly impacting the way that people, right, either consumer behavior or enterprise behavior. And we're starting to see that, right, the stochastic nature of Gen AI, the stochastic nature, or I'm going to call it almost like multi-stochastic nature of agents, makes it really hard when they're not appropriately guardrailed, or they don't have, right, to use bowling bumpers as the analogy, right? It's hard to wrangle them to do truly useful things consistently, right? Or at least truly autonomous, high-level useful things consistently. And I think, when we look at, right, I actually think Robinhood or investing is an interesting use case for this because it's not, right, maybe you could call it a research agent, but what it really is, right, it's not going to go and make those investing decisions for you. It's going to try to give you the information. Now, the question in my mind is, right, how much of it is going to really impact, because of the way that AI sounds really confident when it gives you most answers. It's how much of it is going to impact how people actually go and make those investing decisions when it's, I'm going to put in big air quotes, not financial advice, is sort of yet to be seen, right? The lasting impact of how this impacts, sort of a behavioral finance element, I don't think we know yet.
It's so interesting because as a day trader or a casual investor, let's say, like what I would be keen to see is like, give me the answer. Tell me what is that thing I should buy? How am I going to make the money? Give that to me. And I suppose that is not a thing it can really do. And so unless it does have access to some of those amazing insights,
but it's going to make you feel like you can.
Yeah,
is almost the right. I'm going to call it the problem, right? And I think we saw this in the US, right? The SEC is having a really hard time coming up with good guidance around AI and good regulations around sort of the role that AI can play in financial advice or investing decisions.
Yeah, it's a difficult one. All right, cool. We're going to move on to the next news item, and this one is from Finextra. Peach Payments introduces real-time clearance payouts. Peach Payments has introduced real-time clearance RTC payouts for all merchants on this platform, enabling near-instant disbursement of funds. Recipients can typically access funds in under 90 seconds, whether topped up via settlement funds or ETF at approximately half the usual transaction fee. The solution includes automated reconciliation, float top-ups, batch payments, CSV uploads, and both API and UI access, reducing manual intervention and easing failed payment handling. The feature is ideal for businesses needing fast distribution like gig platforms, payroll providers, insurers for claims, and those managing refunds, commissions, salaries, and bonuses. So, Anine, of course, we're going to come to you on this. Maybe just for our global audience, maybe just start by painting a picture of the kind of the situation in South Africa for real-time payments and how what you're doing is changing it.
Thanks. Yeah. So for South Africa, it's a very costly payment method. The traditional bank-to-bank payment method for real-time clearing is very costly. It goes anything from 35 Rand up to 150 Rand typically, and each bank can charge what they want. So we've become so accustomed to having that high fees associated to a payment that it's been high time for us to develop a product and a rail that are not dependent on those interbank real-time clearing rails. So the benefit of this for us, I think it's been way overdue, and the public is so ready, and the payees, the payers are so ready for it on both ends. I think with Peach's new payouts model, the costs are obviously minimal. It's less than 1% typically of what the traditional real-time clearing payment method would cost. So most definitely it changes the landscape significantly in deploying this.
And I guess it makes a huge difference. I mean, if I can get paid out as a gig worker in, I think it's like 90 seconds or something, it's incredibly fast. That for me is going to make a material difference to my business. I no longer need to figure out where I'm going to fund my cash flow from if I'm just going to get paid immediately.
Of course, and I think the one big thing, if you think about wage workers, the traditional ways of paying used to be if you have to select a product like same day value, SDV as they call it, and then it comes at a significant cost to the employer to make sure that everyone receives their salaries or their wages at the exact same time, albeit 2 or 3 in the morning when that interbank exchange has occurred. So with this payment method, you no longer have to pay an additional fee to ensure that everybody receives their funds at the same time, albeit within 90 seconds. So we like to call it near real time, but in actual fact, it's as real time as it gets. So it's definitely very exciting. And the fact that the fees have been cut so significantly is a mammoth step ahead in the right direction for us as an economy and as a payments landscape and architecture in general.
It's amazing. Jason, I want to come to you because I think that in the US and certainly globally, like payouts, real-time payments is just such a huge theme. There's so much innovation going in that to try to cut that time. I mean, like I know, for example, if you're a merchant on Amazon, you still have to wait days, I think, before you get paid out. So are you seeing this just grow as like a, I don't know, like a sector? It's a huge investment theme as well, right? There's lots of VC money pouring into trying to solve this problem.
There's a ton of VC money flowing into payments generally, right? And specifically merchant payouts and platforms that are enabling that have seen a big boost this year, along with some of the other resurgent areas in fintech, right? I mean, I think it comes to a very simple underlying thesis, which is people either for their daily lives as individuals or for running a business want access to their money as soon as possible, right? It's a very easy thing. The faster you can get to it, and the promise of making that money more available and more transparently available is always going to drive, sort of the future of fintech forward, right?
Yeah.
90 seconds is, again, about as real time as it could possibly get. But when you think about, things like peer-to-peer payments and, how you use Venmo, Zelle, PayPal, whatever it might be, there's always going to be the allure of getting you closer and closer to, okay, money moves and I can use it for something.
Yeah, absolutely. But we just recorded a podcast on stablecoin. That's another thing that everybody's talking about to try to reduce those settlement delays internationally. Chantal, I want to come to you on this one. I mean, are you seeing more and more fintechs in the UK set up to try to solve these problems?
Yeah, I think it's hard, isn't it? Because I sometimes don't know if I'm a particularly good example of a consumer, because I tend to operate with companies that do faster payment services. Everything's very, very quick. If something takes more than half an hour to clear in my bank, I'm panicking because that's not normal to me. But I know that there are a lot of people that don't have the luxury of being able to operate with those kind of services. I do think instant payouts is, we've got it in the notes here actually, things like insurance, refunds, things like that, where companies really like to drag their heels in terms of kind of giving you your money back that was so quick to fly out of your account when you were making the purchase.
Yeah.
And there are some really cool things going on in there. I think Eden Red Payment Solutions launched their virtual card for insurance payments probably about a year ago now. So sort of instant insurance payouts, which would be a game changer. Obviously, I'm not really sure how much insurance companies want to make those payments instantly, but I think they are coming under more pressure from their regulators to move that money a little bit quicker, at least in the UK. So I think there's a huge amount of opportunity. It's great for the consumer. I guess there'll be a bit of a first mover kind of moment to see which of the big retailers, insurers, like who are the people that go, we're going to put our line in the sand and we're going to be the first people to go, yes, we'll give you your money back the minute that you put this request in or something. Because ultimately it kind of gives them less time to review, less time to debate or dispute. But it's good for customers. So
it's such an important point. I mean, you're right. In the UK, faster payments, we all get paid very quickly. That's fine. But the insurance area is such a huge, and you're right, it is still very slow, still very clunky on the claim side. So that's very interesting. Anine, I want to come back to you just to talk about the fintech scene in South Africa more generally. I mean, we have a stat here. I think that's very interesting. So in 2023, South Africa's fintech market was valued at roughly $7 billion. It's projected to nearly double by 2033 at about a 7% CAGR. I mean, what is happening in South Africa that is spurring this phenomenal growth? Is it a leapfrogging? What's happening there? Because it's remarkable.
It most definitely is. And I think it's an amazing time to be alive and in fintech. It's massively exciting. As you rightfully noted, the speed of our evolution, our development, and our innovation in this space is insane. And it's you'll never catch up. As soon as you start something, someone else has already launched it. So I think as fintechs, as a community, we feel a lot of, I wouldn't say pressure, but a lot of clarity in terms of stick to your guns, finish what you started, get it out in the market as soon as possible. It doesn't have to be perfect, just get it out. And I think that is something valuable we as a community are doing, and that benefits the end consumer and our merchants and our general trade base, especially for e-commerce, but also at point of sale. One would think that point of sales now, it's you've done all you can, but there's a lot of innovation on that front also coming through quick and fast. So I think it's if we look back at this phase in terms of South African history and the payments evolution and what's happened, we'll most definitely recognize, I'd say, the past 5 and the potential next 5 years as something remarkable that has happened. I don't think we'll ever equal this speed again. But it is remarkable. But also, very, very important to note, it's not without the support of our South African Reserve Bank and all the players in the industry. It's a collective effort, and it's collective pressure from all ends in pushing that innovation, pushing and supporting the same narrative, joining hands and saying, as an industry, this is the right thing to do. So we've had Vision 2025 from our Reserve Bank as an example, strongly supported by all the players in the industry. And collectively, they've consulted, and collectively, we've moved forward in getting these, I almost want to say, groundbreaking and revolutionary products out there to benefit our economy and our consumers.
Yeah, it's amazing. And I think we've seen how in other countries, getting the payment rail right and modernized is just so important to, also economic growth. You look at countries like India and Brazil, for example, it's just staggering. In Brazil, you look at Nubank's valuation, it's just incredible. It's like upwards and to the right constantly. So, it's amazing to see and want to watch how things go. Great. On that note, we're just going to take a quick pause here and back shortly.
11FS Pulse is where financial services comes to benchmark its customer experiences. Home to over 17,000 hand-picked user journeys from over 800 brands, Pulse showcases best-in-class UX that covers everything from onboarding and payments to investments and business banking. By using Pulse, Monzo was able to cut its product research phase by 90%, and they're not doing too bad. Want to see what all the fuss is about? Book your demo with our in-house experts today at 11fs.com/pulse.
Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you will find just as interesting. And this one is from Finextra. Starling extends business banking suite with Ember acquisition. Starling Bank has agreed to acquire Ember, a UK-based accounting and tax software provider, for under £10 million. Ember's tools, including bookkeeping, invoicing, and tax compliance, will be fully integrated into Starling's business banking app by the end of 2025 to support small businesses ahead of the UK's Making Tax digital mandate in April 2026. Starling currently serves around 500,000 small and medium-sized enterprises, and the integration aims to streamline tax reporting and financial management for sole traders, landlords, and other impacted users. Ember's platform, previously available to customers of HSBC, Barclays, Lloyds, and Revolut, will become exclusive to Starling Bank customers starting in 2026. This is Starling's first acquisition since its purchase of Fleet Mortgages in 2021, signaling its continued approach as a natural fintech consolidator to enrich its SME offering and further differentiate itself. Well, one thing that's interesting about this is we at 11FS, we see that globally, in the SME banking market is growing massively. Anything associated with accounting tools or expense management, virtual cards, like tax sweeping, tax management are just such incredible wedges to drive into a market. And you see a lot of these fintechs really, really pushing and driving to become a bank. And so I think it's great to see Starling say that, okay, we need to expand our suite of services in order to expand our moat and expand the revenue lines that we can get. I think on the other side, on the flip side of this, I'm kind of surprised that in some ways they've waited so long. I mean, I think Starling is a challenger bank. I think like one of the stories about them in some ways is the pace of innovation hasn't kept up with Monzo and Revolut and some of those features that are coming out there. So it's a great thing, but to be its first acquisition since 2021, maybe it's a little bit slow. So I think there's something interesting there as well. Okay. And finally, now time for something a little bit lighter to finish this week's news show. And this one is also from Finextra. Zopa marketing stunt invites consumers to bite into Biscuit. I think that is the weirdest headline I've ever had to read out in the show, I have to say. Zopa Bank has conducted an eye-catching marketing campaign by driving a giant box of 10,240 biscuits through central London. The number of biscuits are equivalent in value to the £256 customers can earn in a year from cashback and interest by switching to Zopa's Biscuit account. Launched publicly in June 2025 after a beta phase, the account has already attracted around 100,000 customers. And actually, I remember interviewing someone from Zopa just as it was launched and talking about biscuits. It was quite a cool conversation. Benefits include 2% cashback on bills, 2% interest on balances, and 7.1% AER on deposits up to £300 monthly. So what does everyone think about this? I'm very disappointed they didn't seem to be giving out free biscuits. They must have been giving out free biscuits. Chantal, what do you think about it? Did you see this truck going through central London?
I didn't know. It's such a shame because I think the photo they've got on the article is they've parked it right outside Santander, right? Because they've timed this to go out with the closure of Santander's 123 account, which was previously one of the best kind of
so smart
savings accounts that you could get. So great visual. If you do it just for that photo, then I totally understand. It's harder to pull off a PR stunt than many people think. But I think very fun, and I think what an amazing slew of benefits. Part of me wonders how long they'll be able to keep that up for. It must be an introductory offer.
Yeah.
But you never know. I don't want to say that if it's not true. But I think really fun. And, we don't get enough stunts in PR. I remember we did one with Wise where we brewed a beer to match the average exchange rate for different countries, and then sent it out to journalists, and one of them exploded in a journalist's kitchen.
Oh my God.
So that was a really good day for me.
That
but
hilarious.
it is, these things are hard to execute. So I always love to see a stunt. It's a good effort. You should always try and do them if you can.
Speaking of which, just opening it up to the floor, what is the strangest or most out there fintech campaign any of you, or banking in general, any of you have ever seen? Any ideas? I mean, I'm not personally watching TV all the time, so I don't know.
I'm trying to think of good guerrilla ones that I've seen out in the world. I actually don't know that the TV centered ones are really the best stunts. The stunts are the ones that happen and then go viral because of it.
Yeah.
It's going to take a second to come up with something good.
Well, there's Snoop Dogg and Klarna, right?
The Snoop Dogg one's a classic. It's harder to do them these days because there's so much risk in getting it wrong.
Yeah.
But I think if I can toot my old horn, I think the Wise, Nothing to Hide, kind of stripping down the founders and sending them through the streets to talk about the lack of fees, FX kind of stuff. That was always good fun. But again, we're talking 10 years ago now.
What, literally stripping them down?
Yeah. Have you not seen it, David? We'll have to send it to you.
That's amazing. I didn't know about that. So what, completely naked, almost naked? What's the line here?
Not completely. No. Had to be PRable. But we're talking underwear, and I think there was a couple of hundred people. I can't take credit for this. It was before I joined. But yeah, sort of running down Wall Street, nothing to hide, no FX fees, full transparency. That was TransferWise, right? Before we came Wise, but yeah, good fun. I don't think we'd get away with doing that today, to be honest.
No, probably not. But that's a very, very cool one. All right. And on that note, that wraps up today's FinTech Insider News. Thank you so much to today's guests. And where can people find out a little bit more about you and your companies? Anine.
Now, you guys can go on to peachpayments.com and you can find all our information there. And you're welcome to reach out.
Amazing. And Jason?
You can go to cbinsights.com to find out more about CB Insights and all of our offerings. And then if you want to keep up to date on the latest insights going on in the startup world across a very broad set of topics, including fintech, I'm very active posting on LinkedIn. So you can follow me there.
Amazing. And Chantal?
Yep, so you can find me on LinkedIn at Chantal Swainston. And if you want to learn a little bit more about The Herd and what we're doing to improve gender diversity in fintech media, you can find us on the-herd.co.uk.
Amazing. Very cool. And as for me, you can find me on LinkedIn And thank you so much for listening to today's FinTech Insider. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcasts@11fs.com. Thanks very much and goodbye.
Most successful fintechs didn't begin with a sprawling suite of features. They started by doing one thing exceptionally well, something that solved a real, underserved customer need. At 11FS, we offer the research, design, and product expertise to help you not only identify your differentiator, but to take it to market as well. Through our proposition labs, our experts can move you from a vague concept to a validated, investment-ready proposition, quickly and confidently. Launching a new fintech venture is hard, but with the right process, team, and insights, it doesn't have to be a gamble. Visit 11fs.com/ventures to find out more.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.